Welcome everyone. This is your Kasi from SLKFC channel. Thank you for 250 subscribers. Thank you all being here. Thank you for your likes, comments for the post video. So we have promised that once we reach 250 subscribers, we're gonna speak about the expansion topic, right? So this is the short video or the short and sweet video with the full explanation about the expansion. So we don't want to wait, okay? We make this weekend useful. So this is the video, one lesson. That's expansion today. Okay, so let's get into the topic here. So the topic was the expansion. Okay. So if you want to know the expansion, so you need to know about the market structure first. So you all know the basic market structure has start with, if it is a bullish trend, it always make a new higher highs like that. Okay. So in a bullish trend, when every new higher high was made, that we called as the expansion. Understand? In a bullish trend, whenever the new higher high was made, that move we called as a expansion move. So same like in a bearish trend, when the new lower low was made, when the new lower low was made, that we called as expansion. Understand? So the expansion move was very impulsive move. So the expansion move always create a new higher highs in a bullish trend and new lower low in the bearish trend. Understood? So this is the basic market structure you need to understand about the expansion move. So here, how we know that what is the expansion move? How we can confirm that that is expansion move? For that, you need to know about the market cycle. So you all know that how the market cycle performs. So what is the market cycle? So the market cycle was the candle going to move from internal range liquidity to external range liquidity and then it move to internal range liquidity. So when it moves to internal range liquidity to external range liquidity to internal range liquidity, that is the market cycle. It always move from one liquidity to another liquidity. Understand? So how we can consider the move, which is the expansion or the retracement, it's all about the liquidity. Understand? It's all about the liquidity. Once we know what liquidity has been taken out, we know that what type of move that is. So every move, every that is the expansion or that is the retracement, every move was happened only after taking the liquidity. Understand? So every move happened only after taking the liquidity. If the price was taken the liquidity and give you a move, that is the retracement move. Okay, same like that. If the move has taken the liquidity, that we called as the expansion move. Then you have a doubt. What is the difference between that? You're saying that the retracement move also taking the liquidity, the expansion move also taking the liquidity. Then how to differentiate the move? What is the expansion? What is the retracement? Clearly understood that after taking the liquidity, if the move was sponsored by a key level, if the move was sponsored by a key level, that type of move was expansion move. If it is not sponsored by any key level, that type of move was retracement move. Hope you can understand the differentiate. Let me show you. If you have some liquidity here, you have some liquidity here, okay? If that move after taking the price the candle came to take the liquidity, after taking that liquidity, if it is sponsored by any key level, here you can see we have a v-shaped key level, right? So after taking the liquidity, if the move was sponsored by a key level, that type of move we called as expansion move. That expansion move always make a new higher highs or new swing highs. Understand? So this we called as expansion move. Now, what is the retracement move? After taking that new higher high, you can see the price will, whenever the liquidity has been taken out, the momentum has been failed. If this is the buy momentum, after taking the liquidity, the buyers has lose their momentum. Once buyers has lose their momentum, the sellers get into here and bring the sells here to take some internal range liquidity. After taking some internal range liquidity, then it will get into another new higher highs. So here you can see after taking this higher highs, that level doesn't sponsor by any key level. You can understand it only came to take a new higher highs. It doesn't sponsor by any key level, but it will give you some sell momentum. That move we called as a retracement move. Understand? So after taking the liquidity, this is also the liquidity. After taking the liquidity, if the candle doesn't sponsor by any key level, that we called as a retracement. If the candle after taking the liquidity, if it is sponsored by any key level, then that we called as expansion. Now you can differentiate that what is expansion, what is the retracement. Once you understand the expansion and the retracement, it always work very well on higher time frame. So always whenever you need to know the direction from the higher time frame, if you want to know the pair direction like Euro USD, GBP USD, you always need to start with higher time frame. What is the higher time frame? Monthly, weekly, daily. These three things are higher time frame. You need to understand the higher time frame direction first. Once you understand the direction, in higher time frame, daily or weekly, you have some key level, you have some liquidity here. So when the price going to take the liquidity out and sponsored by a key level here, you all know that what is the target? The target was the external range liquidity. So once you know the higher time frame direction, once you know the expansion has playing out here, then you can go for lower times, you can find the entries, you can target it up to here. There is many opportunities you will get on lower time frame. So you can get the trading opportunities, you can target up to the external range liquidity. So how expansion move useful into your trades? Once you know the direction of the market, you don't get confused. The many people, when their stop loss hit, they will change their direction. So when you know high time frame direction, you won't change your bias until it break the invalid level. So on every trade, you need to know what is the invalid level, how to find the invalid level. So for that, when the price came in to make a sweep, okay, and after it making the breakout structure. So what is a breakout structure? When the candle gives us a sweep and the first breakout we call this a breakout structure. The first breakout we call as a breakout structure because it's changing the structure by this breakout level. So we call this the breakout structure, right? So after breakout structure, you always need to wait for some liquidity to form. Some liquidity to form. Once the liquidity has been formed, you need to wait for the liquidity to taken and you need to wait for any key level to sponsor. So here you can see this level, this this key level has been sponsored this move to take this level, right? Now you can confirm that the expansion has played out here. So the higher time frame direction changed from bullish into bearish, right? Now this high which is reacted from the level after taking the liquidity, this high we called as a strong high or a protected high, whatever you can call the strong high or the protected high. So this is the your invalid level area. Whatever trading you're going to take after here, this is your invalid level. So what the price can do, the price can give us some pullback here and it give us some entry and it start to make another low. Then it will give us a pullback, then it will give some entry, then it will continue the trend here. Okay. So that high, the first high after taking the liquidity sponsor by a key level, that we need to know as a strong high or a protected high. Understand? Why the strong high and the protected high we need to consider? That is your invalid area. So when the candle break that area, you need to change your bias or you need to change your direction from bearish into bullish. Understand? So what the level I told you, the swing high or protected high, so what level? Sweep, a breakoff structure, a liquidity. So after taken the liquidity, it reacted by some key level. That level, that level, what we call a swing high, strong high, or a protected high. That the extreme level of that level, that we called as apex level. You understand what is apex level? Not this is apex, not this is apex. Why we choose this is our apex level? Because that is our production level. Understand? That is protected high. That is the extreme level for that. Once that level was broken, that we need to change our direction. So, by any possibilities, if you have any trading opportunities in that apex level, you can conformably take that trade at least it has 85 percentage win rate on that apex level. You understand that? So whenever you will get the opportunity on that apex level in the strong high, the protected high, you must need to take your trade without any hesitation. You can trust that setup that will work out at least 85 percentage. Okay, so that is the strong high and the protection high. So here, once you understand about the expansion move, like after taking the higher time frame liquidity and it is sponsored by a key level, that is the expansion move. Now, the many people has a doubt, okay, okay, we have a key level here, right? So if we don't have any liquidity, so this is the key level we have. So I told you that when you have a liquidity, when you have a key level, that we call as expansion. Now, we don't have any liquidity. The candle straightly came into that key level and it rejected from it and it closed above it. Now, in this situation, what you need to do, you know, this candle has potential to give some buys here, but it don't have any potential to make new higher highs. You understand what I'm saying? Every expansion move, the target was a new higher high. Okay, so how the key level, how the candle get the potential to make this new higher high by taking some liquidity and is sponsored by a key level. When these two, this both two are compared with each other, key level and the liquidity, that has the potential to make a new higher highs. If you don't have liquidity here, if you don't have any liquidity here, if you don't have any liquidity here, then if you don't have any liquidity here, only you have a key level, then it will give you some kind of buy move here, but it don't have a potential to make a new higher highs. After that, it will came here and it will fall down like this. Understand? So whenever the key level has and the liquidity has been compared, you need to consider that as expansion. Now the story was, when you don't have a liquidity, only you have a key level. In that situation, what you need to do, you know, you need to wait for the candle to close above the key level. You need to wait for the candle to close above the key level, and you need to wait for any sweep of that same key level. You can see this is the key level, this is the candle low. You need to wait for the next candle to give us a sweep. Understand? So when the next candle give you a sweep and close above the same key level, now you can consider this setup as expansion. Understand? For expansion move, only we have a key level. We don't have any liquidity. For that concept, you need to wait for a sweep. So once we have a sweep, we consider that sweep as liquidity. Understand? We consider the sweep as liquidity. Now the key level and the liquidity. The criteria has been fulfilled. So you can consider this as expansion move. You can start to find the entries to make it a new higher high. You understand, guys, what I'm saying? So this is the key level plus liquidity move. Now, the many people has another doubt here when they have any key level here. Okay, so what liquidity we need to consider? We have some liquidity here. So we need to consider that liquidity, or we need to consider any previous candle highest liquidity. What liquidity we need to consider to take this expansion move? So here the concept was the liquidity need to taken and it need to sponsor by a key level. Understand? This is the behind reason for the expansion. So it may be any structural liquidity. It may be any structural liquidity. This is also the liquidity, or it may be any other a previous candle high as a liquidity because we only dealing with higher time frame. So these both are liquidity. Understand? The structure also liquidity. A single candle also a liquidity. So the daily candle came here and closed below nearby that key level. Okay, so we can wait for the another daily candle to react from that key level, and if it is close to below here, we can look for any other trades. Understand? So here we have a more like how to enter from here. We will speak you on the next session how to take the entries from here, how to set our take profit, how to choose our stop loss level. This all we will explain on the next session. In this session, it is only how to find the expansion move. If it is expansion move has happened, where you need to target, we need to target. If it is a bullish trend, we need to target a new higher highs. If it is the bearish trend, we need to target a new lower low. Understand? So this is how where you need to target on your expansion move. Now, the many people has a doubt. Okay, Fasi, we have taken the expansion move here. Okay, we have taken the expansion move here. We are in the trades. Now, how to know that if the trend was changing, if the price was started to move here, okay, how we know that if the price was changing the direction, where we need to close our trades. If you have any other key levels, if this is the daily key level, you have another daily key level, or you have another daily liquidity. The concept was we going to target internal range liquidity to external range liquidity, right? This is the concept. So the external range liquidity was here. Okay, so this is external range liquidity. Consider this external range liquidity. So if you are entering here, your target was here. Now in between this, the price came to any other key level. So when it reach any other higher time frame key level, if it give you a sweep of that key level, understand? You are taking a trade from this level. You are taking a trade from this level. Here you have another key level. Okay, you have another key level. When the price came to that key level and give you a sweep on daily time frame, understand? You need to see, if you see any sweep on that level, it means you have like this, and the previous candle swept that level on any other level. You need to close your trades because it has potential to change the direction. Not only the people who know the CRT, they only following the CRT, not like the non-CRT work like that. Only CRT work on high time frame key levels. You have some high time frame key level. Here you have a CRT. Here you have a CRT that will work out. Understand? So that will work out on the CRT. So not only you don't need to consider the CRT in any, if some people saying that daily CRT, they will take it. Not like that. The CRT need to work on any higher time frame key levels. If there is a higher time frame key level, then you have seen the CRT here. What is the CRT meaning? The single candle created a liquidity, and the next candle take the liquidity, and the third candle takes the target. Understand? So this is we call this CRT. So the CRT on higher time frame key level will work. Not only the CRT without any higher time frame key level, it won't work. So always consider, always combined with each other. We need a profitable trade. So for that reason, whatever we going to use, whatever confluence we going to use, if you see any confluence like internal external range liquidity, session liquidity, we can use for the profitable trade. Understand? So here, when you are seeing any key level and we have seen the sweep, we need to close our trees because it has potential to change the direction. So other than this, what all have potential to change the direction? I always say that the price only move for two things. The one thing was it will move for attack the liquidity, attack the liquidity, and it will move for fill the imbalance, fill the FEG. Okay, so the candle only move for these two things. Once this work was completed, it will change the direction. If the price came to here, and after taking the liquidity, the buy work was done. Now the sellers get in and it will bring the sells. Understand? Now you have any higher time frame imbalance here, higher time frame FEG here. Okay, so we call this one as FEG. If the price was came that FEG, and if we give you a sweep inside the FEG, understand? This is our fair value gap, right? On daily time frame, whatever I'm telling here is all from higher time frame. At least a daily. You don't want to go for a weekly or monthly. At least concentrate on daily time frame. On daily time frame, if the candle comes to fill the imbalance, inside that imbalance, if the daily candle give you a sweep, then that has potential to change the direction. Okay, you don't want to afraid of your trades whenever you have seen your sweep. No, not every sweep change the direction. Only a sweep inside the fair value gap, or if any key level. Understand? So if you see any sweep on any key level, that can potential to change the direction, or if you see any sweep on a fair value gap. Okay, if you are seeing any sweep after filling the fair value gap, then it has potential to change the direction. Now you can understand, guys. So this is all about the expansion move. Now I want to show you some examples for this expansion move so that you all understand how the expansion move done. Without the examples, without the real times movement, we cannot trust the topic, we cannot follow the topic. So I want you be to participate on some assignment here. I will tell you later on this video. So before that, I want to show you some examples where I have taken for you. So please wait for that. I will show you. Okay. So I will show you some examples to understand the expansion move. So here you can see, guys, you can see the internal range liquidity has been taken out here, right? And it is sponsored by a key level. So whenever the internal range liquidity has been taken out, it is sponsored by a key level. What the move called? That is expansion. You can see the target has been achieved here. Understand? So this is how the expansion move look like. I have a lot of examples, not one, not two, not three. I have almost 50 examples for you. So here you can see we have a daily key level here. So in this daily key level, you can see a sweep. So when you will see the sweep on the daily key level, that has potential to make the expansion. Now you can see the target has been done, right? So this has the potential to uh, make the move as expansion. Understand? So the daily key level, inside the daily key level, we have the sweep. Okay, so this we call as the expansion move. And other than that, you can see the same one. And here, let me go to another. Here you can see another example. The same daily key level. Inside the key level, you will get a sweep. So that is the potential to make the expansion move. Here you can see another example here. The internal range liquidity has been taken out. It is sponsored by a key level. So that make the expansion move to take the target here. Understand, guys? So that one, and let me go for another example. So here you can see the internal range liquidity has been taken out and is sponsored by a key level that makes the expansion move. And another level and another. Here you can see internal range liquidity has been taken out. The daily key level sponsors the move. So the main thing is after taking the liquidity, understand, after taking the liquidity, the buyers has lose their momentum. Okay, when the buyers has lose their momentum, we need a potential sellers to make the move has expansion. For making the sellers as potential, we need to sponsor. We need any sponsor key level to make the move. So that was happen here. After taking the liquidity here, the key level has the potential because these all higher time frame, right? These all higher time frame, that higher time frame key level has sponsored the move and make the move for us expansion. Understand, guys? Now let me show you another examples. So here you can see it takes the internal range liquidity. It is sponsored by a key level and it will give you an expansion move. So here I have almost a 50 examples for your studies. I have almost a 50 examples here how the expansion move happen here. So if you want this for your practice or you want to practice that level, you can ask me here, or I will drop my Twitter page there. So follow my Twitter page and send the direct message to my Twitter. I will send you PDF there. Keep, don't waste the time. Always keep practicing it. Then only when you get into that chart, into the real examples, when you see on your desktop or your mobile, then only you can understand what happened here, why I choose that key level, why I choose that liquidity. So everything happened when you sit in front of the computer, in front of your mobile, and you start to study. Understand? So if you want to make this useful, if you want this video want to help into your trade, you must need to do some assignments. So I have a 50 examples in that PDF. I will send you that PDF. Okay. So I will drop my Twitter link. So follow my Twitter and send the direct message there. I will send you the PDF. Once you receive the PDF, choose any five pairs. Not I have a 50 pairs there. In 50 pairs, choose any five pairs. In that five pair, if you find that expansion move, how you enter in that level. Understand? There is the expansion move I have mentioned there, right? Now let me show you some examples. So for example, this is the expansion move, right? So I have shown that the liquidity has been taken out, the liquidity, internal range liquidity has been taken out, the daily key level has been sponsored. Now, what is your work is, if you are a trader, you know the direction here, how you choose your entries there, how you choose your entries there. So that is the main thing on the assignment you need to find out. Maybe you can go for a lower time frame and you can see that what entry we can find there. Here you can see the internal range. Sorry. For example, let me show you. So here you can see, for example, the internal range liquidity has been taken out and the daily key level has been sponsored. After that, you can see it will give you the A-shaped key level and it will give you the potential. So like that, whatever entry, not only my entry you need to follow, whatever entry, if you know the higher time frame direction, how you choose your entries. The many people struggle in high time frame direction. They cannot find if that is a bullish move or a bearish move. Whenever they hitting their stop losses, they are changing the direction. Not like that. The clear move from this to this level. This sell move, no daily time frame, almost 100 or 200 pips here. So only one move, only one line gives the direction from this level to this level. So this only you need to find. Before finding entries, before studying the entries, you always need to know the higher time frame direction. Okay, so in that 50 chart, you need to choose any five pairs. In that five pair, I told you the direction, right? So I told you the expansion direction. If that is the expansion direction, how you choose your entries? If you are a trader, how you choose your entries? I need to know what the trade that will be buy trade or the sell trade, where you choose your entry, what is the reason for your entry, what is your stop losses, and what is your take profit. These all the thing I need to know So once you can complete the assignment, you can send me in Telegram my page. I will drop my Telegram ID here, so you can drop that. So hope this session, this video will tell you how the expansion move will tell you the high time frame direction. Once you know the high time frame direction, until the target reach, you don't want to change your bias from bullish to bearish or bearish to bullish. Every retracement, it will give you the trading opportunity. You can wait for the liquidity to take and you can enter on the key level. You can wait for the liquidity to take and you can enter the key level. So every retracement move, you can take a trade until it reach the external range liquidity. Understand? So make this video useful, guys. Once you understand, if you understand this topic, if you understand the way of my teaching method, so please drop your comments here. That will help me to do more videos here. So if you are not in my Telegram group, please join that. It is very worth that. Very valuable here. The valuable traders are that they will drop many ideas there. So this is the short video, guys. Thank you for being here. Make subscribe, make like, and put the comments here. We will see you next week with the type of entries after finding the expansion move. How we choose the entries. That will be the next video. So this is the short video we have explained you about the expansion move. So this is the today video, one lesson. That is the expansion by your SLKFC. Thank you guys. Have a good day. Bye bye.